Hello traders, Nick Shaheen here, looking at Apple, more so of a how to trade the ticker in general, but it also is a wake-up call to those who are falling to, biting on the headlines. The headlines are so confusing these days. I promise you that we would be better traders if we just turn off the news and listen to the P&Ls, meaning what the company says, and then what the chart says. I'm going to sound choppy today. I had an emergency open heart surgery on Friday, and so I'm still recovering. This is my first day back at the desk. Happy to be here, so let's go. So this is a daily chart on Apple, and I knew that for a while now it was going to there were good odds of it hitting 230 plus. Best way I can describe it is the fact that it did one push off of the Christmas low, faded to about halfway. Those who like Fibonacci, roughly 50%, and then put in a good effort into finishing the third leg. So any way you slice it, A, B, C, Fibonacci, or whatever, Apple was doing the right things. Even if you look at this little bounce here, it retraced almost halfway, this little leg. So it looked good. The trade for that would be a longer term commitment to Apple chart and ignoring these dips. Hard, but you should ignore them. You do a thesis, you set a trade with time in mind, appropriate time frame, an appropriate stop, and as long as your thesis is alive and your levels are not there, then I would stay in it. But today, the note is about the intraday action. All this is great. I'm telling you now, it's weeks later, but it all applies intraday, and let me show you why. This morning, today we're having a super rally in the market off of whatever. You listen to CNBC, the tickers are comedy, an absolute comedy. Yesterday, the ticker headlines, we were having a flattish day after a big Friday. And all they could say is, markets are disappointed with the outcome of the trade talks. I was like, what are you talking about? This morning they would say, markets are up on the outcome of the trade talks. I kid you not. This morning's ticker was Japan's market 5-month high or 5-week high, whatever the hell it is, on optimism from trade talks. Yesterday, not much different. They were using the trade talks as a pessimism. They just string along headlines and facts. That's their job. Okay, so this is 5-minute chart for Apple. This is today. Markets are soaring. Apple decided to do this. So somewhere around here, I noted in the chat room that Apple has a potential of hitting 235, some sort of an inverse head and shoulder. And I said the target would that be, if they don't find footing here, is to actually hit 235. And it did, not minutes, literally like 10 minutes later. Every candle was 5 minutes. But once it hit 235 and the candle was somewhere around here, I said, this is not where I'd get out. This is not where I'd start shorting. Those who shorted here, the ones that saw what I saw, they get out here. They got a couple of bucks, they're out. Reason I don't start shorting here, because this was yesterday's open action. That's a solid, big, fat volume. This is these volumes get fatter with. These ticks, these candles are fatter the bigger the volume. So the bigger the volume means that there's more action there, more buyers and sellers. So it's not going to be butter going through it. And if not this one, whatever that is. And there's probably more this way. But the first step would be here. So the lesson of today is ignore the headlines, watch the stock itself for the short term or the long term. These apply on any time frames, I promise you. And this was the 5-minute time frame in Apple. I didn't short the market because of it. So now, in fact, Apple is the upside potential for the market. So the markets are at 3,002, the S&P. Just now, I just peeked left. And Apple is in the toilet. If Apple and when Apple recovers, that's incremental bids on top of the FANGs in general. Facebook is up like 3.5%. The banks are up in spite of results, especially on Goldman Sachs, which by the way is an opportunity there. So anyway, today's lesson is don't listen to the headlines. Get educated on the stock levels, charts, patterns. It's not rocket science. All the stuff repeats itself. I'm not a genius at technical analysis. I know the basics, and I know them very well, and I don't need a ruler to get them right. I can look at a chart and I can tell you the price action looks like this and looks like that. Okay, so we just got an alert while we were on for AMAT. I set it earlier lower and then I moved it up just to see if it's a fake out or not. So this is a live opportunity here. So looking at AMAT, this is a daily chart. They're exceeding the last fails. Depends on where they close today. They could be in a target to go higher. I'm going to go to a weekly chart to capture more. Ugh. Come on, man. Hold on. I got to reset it. Okay, so this is a weekly chart that shows the same opportunity. They're above the last fails, definitely on the weekly and the daily. They haven't closed. Once they close above it, the upside is good. 50, what is that, 57, 58? ASML reports tomorrow, and coincidentally, I just closed my longs. What? Sorry, folks. I closed my longs just because I had a huge win, and I didn't have any upside target. I should have probably trailed it, but I paid 67 cents for the calls, and now they're $4.80. I just couldn't justify leaving it on. Okay, so this is me saying out, and I'll see you later.